Well, stocks may be up today, but remember the S&P 500 has dropped more than 10% from its high this year back in late April. But our next guest says that doesn't mean that stocks are cheap. David Donabedian, he's Chief Investment Officer at Atlantic Trust. He says this is not the time to take risks. His firm has $16 billion under management. It's also the private wealth management division of Invesco, and he is here in studio with us today. David, thanks so much for coming in. Appreciate it.
Thank you.
So after this decline that we have seen, we have had some investors come in and say, now is a good time to get in and to buy. Why don't you think valuations are attractive enough?
Well, the valuations in the U.S. market are starting to get more interesting, but our general advice to clients is it's not a time to take more risk, but it is time to look at the risk portion of your portfolio and perhaps do some reallocation. The areas where we see the most concerns right now are Europe and Japan. We've seen the sovereign debt issue and the euro issue recently. Japan has a number of political and growth problems. So for investors that have a lot of money allocated there, we're recommending that they cut back and look to two more attractive areas, one being the highest quality portion of the U.S. stock market and the other being the emerging markets.
Well, when you talk about the highest quality portion, you know, people have different definitions for what exactly that means. So what does it mean to you?
We're looking at typically the very largest U.S. companies with very diversified revenue streams from around the world, global exposure, and these are typically the kind of names that actually underperformed the market last year and in the early part of this year. And a key test here is balance sheet strength. There are a number of companies now that are carrying more cash on the balance sheet than they ever have by one measure in 50 years for U.S. large caps. That creates a margin of safety. That cash can be used to increase dividends or buy back stocks or make accretive acquisitions.
And David, might I ask, that safety that you talk about, is that the psychological linchpin that investors need to hold on to, that they know that somebody has enough capital there to weather the types of storms that we've been through?
Absolutely. It's extremely important in this market. People are so worried about debt, whether it's consumer debt in the U.S. or sovereign debt in Europe, that strong balance sheets and a margin of safety are really important in this environment.
So, David, I want to get to a couple of examples that you gave us of the kinds of stocks you're talking about. The first one is Best Buy, the electronics retailer. Right. There's been a lot of talk about electronics retailers generally recently, mostly because of Radio Shack, talk about what's going to happen. Is someone going to come in and take it over? Do you think that there's a possibility that we could see a combination with Best Buy? Would there be some antitrust concerns if that was the case?
It's possible. Our story on Best Buy really is on Best Buy as a standalone entity, a company that is continuing to gain market share and improve its competitive position. The key metric for our stock selection process is cash flow generation, and Best Buy running at a net cash flow yield up at 13 or 14%. They're going into some businesses that are expanding their margins, and we think the valuation is very attractive.
David, you also like UnitedHealth Group. Why?
Yes. Well, more of a contrarian idea, obviously. There's been a lot of concern about the impact on the company from the healthcare reform law, but we really look at that probably as a wash. They're going to be subject to more regulation and probably lower margins, but they're going to gain enormous numbers of subscribers as well.
How is that healthcare reform affecting the entire sector? What are you seeing?
Well, it's more sentiment and worry because so many of the major parts of the bill don't take effect for years. So it's more of a sentiment overhang right now. One of the results of that is that the stock is trading at 8 times 2011 earnings and is a significant cash flow generator.
All right, David Donabedian joining us on set, Chief Investment Officer, Atlantic Trust. Pleasure to meet you. Thank you so much, sir. We appreciate it.
Thank you.